And I'm going to start the slideshow. All right, well, good afternoon, everybody. Welcome to Amplify Latinx's webinar on access to capital under the CARES Act. Thank you so much for joining us this afternoon. I am Betty Francisco. I'm one of the co-founders of Amplify Latinx, and joining me is Rosario Ubiera Minaya, our executive director from Amplify. And we're really excited to have three of our panelists here, Juan Carlos Morales from Surfside Capital Advisors, as well as Luis Roman. They have been in the thick of this in terms of helping businesses access capital, assess their businesses, and apply for some of these loans that you're going to hear about today. And then we also have Carlos Hernandez from the SBA. So any questions you have about some of these, we're going to hear straight from the horse's mouth. And we're really grateful to Carlos for joining us. So just some quick logistics about Amplify Latinx. We are focused on building economic and political power in Massachusetts for the Latino community. One of our programs is called Power Up Latinx Biz, which we launched 2 years ago to focus on helping Latino businesses grow in the Commonwealth. And as part of our pivoting to address the issues that businesses are facing in these times, we are launching a series of webinars. This is the first in a 4-part series around business resiliency. And given all of the capital that is beginning to flow, wanted to make sure that our Latinx and Black businesses had access and knowledge about what's available. We are co-hosting this series with BECMA, the Black Economic Council of Massachusetts. Saguna Dawu is a wonderful partner of ours, and Surfside Capital Advisors is also co-hosting this series today. So just a couple of housekeeping items. Use social media to promote anything you're hearing. We'd love for you to share, and we will be recording and sharing this presentation after. But please use Power Up Latinx Biz on social media if there's anything you hear that you can share with colleagues and friends. Our handles are Amplify Latinx, BECMA, and SurfCap Advisors. And then just so everyone is knowledgeable about how to use the controls on Zoom, we will be doing a quick poll just in a minute after our guests introduce themselves. But during the session, you're going to be muted, except during the Q&A where I will unmute you so that you can ask questions. And the way you ask questions is on the black toolbar that you see below on your screen. You can ask questions by clicking on the Q&A and raising your hand, or you can also use the chat box. Let's see, we also will send you a survey to ask if there's anything else that you need or that you're looking for, or if you have other ideas for topics that would help you in these current times. All right, so I am now going to have our guests introduce themselves. JC, would you like to say a couple words about you and what you've been doing in the past 3 weeks?
Great, thank you, Betty. Juan Carlos Morales, managing partner with Surfside Capital Advisor. We're a management consulting firm focused on growth and turnaround strategies, and have a series of experts in our team, including bankers, CPAs, HR professionals, and CFOs. Needless to say, we've been really busy with what's going on. You know, I addressed the Amplify community, I think it was a week ago or 2 ago, about some of the things that as a small business you ought to be doing right now. This was back then, a couple of weeks ago, largely around liquidity management, cash flow management, dealing with some of the pressing people issues, understanding your cost run rate and your runway, right? Today, we're going to be talking about one of the items that we mentioned a few weeks ago, access to capital, right? I have with me my partner, Luis, which is going to be introducing himself momentarily. He runs our crisis lending solutions team, right? And then we're blessed to have Carlos with the SBA. Should we let them introduce themselves and then I can come back to some remarks?
Yeah, so here we go, Luis. If you could introduce yourself.
Yes, first of all, thank you, Betty, and thanks to all the organizers, Amplify Latinx, BECMA, and all the co-hosts of the event. Very briefly, yes, I'm a partner at Surfside Capital, where I work with Juan Carlos, basically focusing on strategic advising and business intelligence. Over the last 3 to 4 weeks, we've been following very closely all of the events and development on the lending options that are being generated thanks to the government acts that have been approved over the last 3-4 weeks. Prior to Surfside Capital, I used to manage investment risk for large asset managers and asset owners. And I think in the interest of time, I'm going to leave it up to there for now and pass it on to Carlos, I think.
Great. Carlos, I know we can't see you, but could you introduce yourself?
Yeah, absolutely. Hey, good afternoon, everyone. My name is Carlos Hernandez here at the Small Business Administration. I'm a lending relations specialist out of the office. We're a team of 3 when it comes to the lending team. However, our reach is, the entire Commonwealth of Massachusetts. So one of the great things about the program is, there's a district office in every state. So if you're calling from outside of Massachusetts and logging in today, it's assuring to know that there's an office and similar role that I feel in every state. And I just want to thank Betty and Amplify Latinx for this opportunity to spread the word as far as the lending programs, and the team there at Surfside Capital for being fellow panelists. And I look and welcome the opportunity to speak today.
Great. Thank you so much, Carlos, for being with us. Earlier today, I had the chance to, BECMA had a webinar as well with Bob Nelson and Nadine Boone. So was really excited to hear about the progress that's being made on getting these loans out there and getting more lenders up and running. So excited to hear more from you. All right, so before we get into the CARES Act and some of the provisions that allow for these loans to be made available, I wanted to do a quick poll. So I'm gonna launch the poll. We're gonna just spend a couple minutes here for you to answer these questions. So we wanna get a sense of who has tried to apply for any of these loans. So whether you'll hear more about these, but there's the Paycheck Protection Program, which is PPP, the Economic Injury Disaster Loan Program, EIDL, their express loans, trying to understand who's applying, whether you've tried. So if you could fill out this poll, we're gonna give it 30 more seconds. Also, please let us know if you've received any or applied for any grant funds. As some of you know, there's a number of grant funds being launched across the country and in Massachusetts. Many have been nonprofit focused, but the city of Boston, Cambridge, and Worcester have launched small business grants. The one for Boston, applications are open right now. So if any of you are in the city of Boston and operate here, we encourage you to apply for that. And at the end of the presentation, we'll have the links for how to do that. All right, so I am going to give it another minute. See, some of you are filling it out. So it looks like, okay, 75%, 8 people have applied for a loan. And about half of you have applied for the payroll protection program and EIDL. That's great. And no one has applied for grants. Okay, so that's something we'll share more on. All right, I'm gonna end the poll. So that just gives you, JC, Luis, and Carlos, there are some folks who have applied, but out of our attendees, that's only half, okay? All right, so I'm gonna end the poll. And I'm gonna share the results with you. Can all of you see that?
Yeah.
Yes.
Great, okay. So I'm gonna stop sharing that. All right, so we can get started. JC or Luis, whoever wants to kick off here around the CARES Act and what it is, and then we'll start going into the particular programs.
Great, thank you, Betty. I'm gonna pass it on to Luis to walk you through some of the details, but generally speaking, the CARES Act was passed 2 weeks ago. It's about a 900-page document. It provides for all sorts of economic stimulus. The small business access to capital, it's a component of it, right? That's about $350 billion of the $2.2 trillion, right? And in that small business component are some of these loans that we're going to be talking about, right? Before we get into some of the loan details, I would tell you the US economy has $35 trillion, right? And we now think that the coronavirus impact on the economy is about $5 trillion, right? So what the federal government is fundamentally doing is trying to replace the economic impact with economic stimulus, right? The CARES Act is just one of multiple things that are happening. As recently as yesterday in Congress, there was talk of yet another package being passed, which would increase the SBA funding another 200 billion, for example, right? So the 350 will go to 550, right? This morning at 8:30 a.m., the Federal Reserve released their Main Street program, which throws up to 2 trillion of liquidity. Again, a component of that includes small businesses, right? So big picture is obviously an economic and healthcare crisis. The economic crisis will last a lot longer than the healthcare crisis. And the federal government is trying to throw as much monetary impact into the economy so we can quickly recover, even if that's possible, as soon as the health crisis is over, right? Obviously, we'll focus today on the federal money because that's where the vast majority of the money is coming from, right? Whether it's the Federal Reserve or the CARES Act. But there are city and state efforts. I am privileged to serve on the board of directors of Mass Development. We approve a $10 million contribution to Mass Growth to top their small business relief fund. But the $20 million, we had a board meeting today. Of the $20 million, only $100,000 is left. So 323 businesses have been funded. And those funds are pretty much gone. So the primary venue of funding from now on is the federal government and or private or foundation grants. And there's a few of them coming around, right? There are grants at the City of Boston. There are grants from the Boston Foundation. There are grants being offered for small businesses by the Foundation for Business Equity, right? So there's plenty of grants dollars out there, and you should be well served to research what's out there and make sure you're applying, right? Obviously, the most popular program is the PPP, right? PPP stands for Payroll Protection Program. It is designed to protect jobs, right? So basically, what the SBA is telling us is, for an amount equal to 2.5 times of your payroll, right, which is your loan amount, right? We're gonna forgive a 2-month expense burn, right, to the extent that those monies are used for people, utilities, or rent, right? In a nutshell, right? Luis is going to get into the particulars. I want to talk a little bit about the process. The SBA, I think unfairly so, have gotten some negative PR over the last couple of weeks about the process. I'll tell you, there are 30 million small businesses in the US. There are hundreds of thousands, if not millions of businesses that are applying at the same time. So this is a very complicated process, and the SBA lending community, the SBA lends money through lending, SBA lenders, right, have had to get prepared for inordinate amount of volume. The only way they can handle this is through technology and system solutions, which took about a week to put in play. And finally, the applications are beginning to move, right? We have clients that received notifications as early as yesterday that the loans have been approved. If you have your accounting records in order, it's a very simple application, and depending on who your SBA lender bank is, you should be hearing back between 3 to 5 business days and funding shortly thereafter, right? So I think a bumpy road to start, but things will get better. There is plenty of funds. It is on a first come, first served basis, but it is understood that if you have the requirements to be eligible for the payroll protection program, you will in fact get funded, right? So piece of advice number one is get your accounting records in order. We have clients that didn't have payroll records or tax returns, or were running cash-based businesses. That's a problem, right? You need to have evidence of disbursement, right? Number two, identify an SBA lender. And I'm sure Carlos and Luis will talk about that, but the SBA website is a great resource of where the SBA lenders are locally, if not nationally. There are a few SBA lenders which are virtual banks like Lendio or SmartBiz. They are taking applications, right? So there are all these workflow issues are being worked through, and I fully expect that that literally hundreds of thousands of loans will get approved over the next 5 to 10 business days. You know, Bank of America 2 days ago reported that they are processed in their own system 177,000 taken applications, not processed, right? Equating to $35 billion, right? So, so it could be frustrating, but I do believe that the process is going to move along, right? And we're here to help. If you have any questions, you know, feel free to reach out. With that said, I'm going to pass it on to my partner, Luis Roman. I call him Dr. Roman. He happens to be a PhD. And he can give us a little bit of an overview of all of these acronyms and what does it mean to you as a small business owner.
Sure thing. Thank you, Juan Carlos. Thanks for the introduction and setting the tone. I'm going to start actually just and get to the point and looking at the slide that you're seeing. I like it because what I'm trying to do with that is showing you first all of the funding implications that are derived from the CARES Act are actually manifested in 5 different options. Those options are right there. They are the PPP, the EIDL, and loan advance. Those are actually 2 different options that are being combined in one when you go to the SBA website. There is the express bridge option and the debt relief option also. However, please notice also the sort of a timeline that I'm adding in this slide at the bottom, where basically with that, I'm sort of suggesting, encouraging a certain order in which I would advise people to move along in this application process. And the reason, I'm going to give you 3 reasons why I'm looking at these options that way. Those reasons are based on the cover period of each program. Number 2, the generous terms and conditions of each one of the options. And number 3, the resources available for each one of them.
And Luis, if I can interject for 1 second, just for the benefit of the audience, the acronyms could be intimidating. Okay, so PPP stands for Payroll Protection Program. I think everyone knows that is the headline, right? And FFCRA is the Family First Act, right? Which has a bunch of employee implications, right? And that will equate to some of them tax credits and things like that, right? And then CARES Act, obviously, which is what Luis is talking about, the EIDL, which stands for Economic Injury Disaster Loan Program, and then the loan advance, right? If you guys have any questions, please send us a question through the chat room, and we'll try to answer them as we go along. Keep going, Riz.
Yeah, thank you. So based on those 3 criteria, cover period, generous terms and conditions, and resources, PPP has actually the shortest cover period. That one is going, the cover period for that one is precisely from February 15th to June 30th. All the other ones are actually running all the way through December 31st. So for that matter, I'm placing PPP as something that you should be aware of the period that is actually covering with that particular option. Number 2, PPP has actually the most general terms, and we will see that in further detail in the next few slides. Number 3, any outstanding amount coming from an EIDL loan, the Emergency Injury Disaster Loan, any outstanding amount from that loan can actually be refinanced under the PPP loan. And last but not least, of all the package that was enacted under the CARES Act, $349 billion was actually put only into the Paycheck Protection Program. And with the most recent news coming from the Fed, those loans are actually going to be bought by the Fed from the lenders. And what that means, why that is important, is because that's going to actually free up the balance sheet from these lenders so they can actually lend more. And there will be more money coming into that. So based on those 3 dimensions, that's why I'm looking at these options over time in the way that I'm presenting them in that slide. And bottom line is, that whether you applied or not for an idle loan, the very next step is actually to apply for the PPP loan. With that said, I think I'm ready to go to the next slide. So who qualifies? And again, all of these are summaries, as Juan Carlos mentioned, summaries of dozens of pages for each one of the different sections that we're going to be covering. A brief summary of eligibility states that all small businesses with less than 500 employees, they are supposed to be in business on or before February 15. And yes, S corporations, C corporations, LLC, sole proprietors, and independent contractors, nonprofit organizations, tribes, and veteran groups are also eligible. I'm ready for next slide, unless there is any question that you want to tackle now. You want to leave it for the end?
Yeah, we'll take it at the end.
Okay. More about the Paycheck Protection Program. It's a loan amount. The loan amount is going to be up to 2.5 times your average monthly. And it's based on prior 12 months of payroll costs up to $10 million. I have to say, though, that actually even for seasonal employees, the calculation is actually can be based on a 12-week period, starting from, you can choose, it's actually optional to the recipient. You can choose whether you take the 12-week period starting February 15th up to May 15th, or you can choose also starting March 1st of 2020 all the way up to the end of the program. So again, if you're a seasonal employee, you still can do this based on a different criteria that the one you're seeing actually in the slide at the moment. Interest rate is actually 1%. The term of the loan is a 2-year. Payments defer for the first 6 months, and they can be up to a year. This is one of the relaxations, exceptions they're making with the CARES Act. If you also wish to pay the whole loan before expiration, there is no penalty for that. And typically, most loans guaranteed by SBA, they require a personal guarantee or collateral. For this one, those things have been waived also. I'm ready for the next slide. In terms of what is included in payroll, there is, again, there is quite an extensive definition of all of the things that are included. A nice summary, you can see it right there. It's going to be based on salary, wages, commissions, payment and vacation, sick, parental, family, medical leave, retirement contributions, group health coverage, premiums, and state and local taxes assessed on payroll. And one thing to keep in mind is that for all of the eligible businesses, you are not supposed to include salaries that are actually in excess of $100,000 per year.
Okay, so I'm going to take a little bit of a breather here. Go back if you don't mind. So this is where a lot of the loans are going to get hung up, right? Because there was an error on the calculation on the average payroll, right? So average payroll has a couple of nuances, right? For example, employees that make over 100 need to be capped at 100, right? Some people are using the last 12 months versus fiscal 2019, right? The SBA, I think, came out with guidance that it was 2019, right? Some people are including contractors in their payroll calculation. There shouldn't be any contractors in the payroll calculation, right? So if that's the case, your loan processing will get delayed, right? So making sure that you are calculating your average payroll the right way and you have supporting documentation, it's absolutely critical.
JC,
Okay.
we have in a few slides later a sample calculation, so you can go.
Yeah.
Great.
Yeah.
All right, next slide. You're on mute, Luis.
Sorry, thank you. What is the, what can you use the loan for? Among other things, you can use it actually for payroll and your employees, rent, mortgage obligation, utilities, and other debt obligations. Keep in mind though, and I think we have also another slide further down, that the portion that you're going to utilize for payroll is actually going to be forgiven. But I think we have something further down. I'll stress later then.
So here's JC, the sample calculation and just what to exclude. Do you want to just quickly run through it? This is just an example. I mean, it'll be individualized per company. And to highlight here, what it does is if anyone is being paid over $100,000, you have to adjust it down to 100, right? So that's the amount that can be included. You have to back out salaries to non-residents, any amounts paid to independent contractors, and any credits that you're receiving under the Families First Corona Act, which is the payroll tax reimbursements for sick leave and FMLA. Okay.
Okay.
Luis or JC, you want to talk about loan forgiveness? Why this loan is so great is that it provides for loan forgiveness.
Before we get into that, I wanted to mention something. If you go back to the slide where it shows the things that it covers, we put in there also employee sick leave and employee emergency, family, and medical leave too. You certainly
backing that out. Yeah, do not include that in the calculation.
Yes. I guess what I wanted to say is that we're not talking today about the other act that was enacted prior to this, which is the one that actually grants money for the emergency sick paid leave and also the emergency family medical leave. But you have to be careful that if you actually are asking for tax credit for those two, then you're not supposed to include it in here. But if you're not, then you can actually include it in here. But that's something that you have to be aware when you're actually filing the form, in case that you actually apply for the tax credits for those two options.
Right.
Yeah, there's a question on the chat room about 1099s. Listen, if I were to pick the most hotly debated issue of the PPP is this issue. First, it was which benefits are included and excluded. That was easy. I think the guidance said, things like retirement plan contributions, healthcare, all that stuff is included, right? So it's not just payroll here; it's payroll and benefits, right? It's employee compensation costs, right? On this issue of 1099, I would encourage you to ask to your lender, whoever you're going to go through. I know for a fact that certain banks are saying 1099s are not included in the calculation because they will have the ability to apply for a PPP on their own as an independent contractor, right? Carlos, I don't know if you have an opinion on this or anything that you could offer on this particular issue. I know that there's been a lot of confusion on this topic.
Well, yeah, no, absolutely, it can. So that is one topic that has come up a lot, and the final definitive answer is no. So 1099s are not allowed to be included in the calculation because back to the statement there, they can fill that on their own. So if you're a 1099 employee, you're able to apply for your own Paycheck Protection Program loan. So that's something that was from the get-go, and it's something that it's been put very clear that they are not included in the calculation for small business.
Great. All right, so we can go on to the loan forgiveness. This is the juicy part of these loans.
This is what makes it so good.
Yeah.
Yeah. So all the expenses that were used during the first 8 weeks after receiving the loan that were used for payroll purposes, they are eligible for a loan forgiveness. And we already said that some of those qualifying expenses include payroll costs, rent, interest on mortgage, debt, and utilities. There is a reduction depending on whether you actually kept all your employees in the payroll or not. And some of those calculations will be based if your payroll costs are reduced, let's say by 25% or more, the loan forgiveness amount will be also reduced. And also no more than 25% of the forgivable amount might be used for non-payroll expenses.
Yeah, and just to underscore this, so the whole point of the PPP program is to maintain employees on your payroll, right? So if you have laid off, you can bring them back, right? So and the period that the bank will look at for forgiveness purposes is the first 8 weeks after you get the loan. So this is the time to start looking at, you know, who's currently employed, can you keep them employed? But that's why this loan is being made available. It's to keep people on the payroll.
Actually, Betty, you said something there that's worth clarifying. The 8-week period, and maybe Carlos knows the answer or Luis knows the answer to this. There was, I believe I read a provision that said that you could go back to February 15th, right? And you determine which 2-month period you want to use, as long as it's between February 15th and June 30th, right? So, I mean.
Yeah, Carlos, can you clarify that?
Yeah, no, absolutely. So, so back to the slide here. So you're right. So as Betty mentioned earlier, so the idea of the program here, the purpose is to keep the employees employed, to keep them on your payrolls, and, you know, they can maintain their benefits, and they're not going to other, you know, they don't have to be on the street figuring out a way how to pay, you know, cost and, you know, feed their families. So the intention of it is, at the end of the bottom line, is to, you know, keep them employed and keep them on the payrolls. So what you're saying is, so yes, you are able to get a maximum loan amount of 2.5 times your average monthly payroll, and you are able to include other expenses, as you know here in the bullet, when it comes to rent, interest on mortgage debt, and utilities. But because the intention is, you know, to keep the employees, no more than 25% of that forgivable amount may come from non-payroll expenses. So that's, you know, something very important to keep in the back of your mind here when you're terminating. And when it comes to the actual period, so we're going to be looking at eight weeks from the time of the final disbursement in order to come back and make that determination. So that borrower will go return back to the lender and provide some documentation to show that, you know, either one, they maintain the number, they maintain the staff, they maintain the level of payroll, the compensation remained the same, and if they did let go of some employees, that they rehire them back before, you know, that June 30th you know, deadline there. So that's the main, you know, intention of it. And it's something that, you know, while yes, it's, you know, as you guys mentioned in the beginning, it was a program that it was a 1 week to turn this around and get it out. And at initial, there was a rush, you know, because we didn't know what we didn't know at the time. And there was, you know, thousands of lenders are coming online here to participate in this program, which meant, you know, every system was overloaded. There was new accounts. They had to bring more people in. But at the end of the day, you know, approvals are coming in, and we've known just here in Massachusetts alone, over $3 billion have been put out, you know, for, you know, approvals when it comes to this program. So it's something that is, you know, once the banks are starting to staff up, it's a matter of capacity, because as you know and I know, most are working remotely. So there's a level up there, and then, you know, got to get systems in place. It's a, you know, a new program. There's new rules, or in some guidance that still needs to be addressed. But for the most part, we've seen that the, you know, community banks, local banks, you know, national banks, they're on board. They're willing to, you know, take on, you know, new clients, existing clients. It really depends on the capacity of the bank itself, credit union. But it's, you know, something that is being rolled out, and we're seeing a lot of, you know, success and, you know, good things coming out.
Hey, Carlos, there's a question on the chat, just if you can address it, since it has to do with the forgiveness. So if someone had a salary of $150,000, they applied for the loan. Obviously, they could only, you know, apply for 2.5 times the 100, even though their salary was higher. But they actually reduced their salary to 100, right? There will be a reduction of salary shown in their books. Does that still qualify for forgiveness?
It does. So you qualify up to the maximum that you entered. So if they were able to base it off 2.5 times, and you're maxed out at that 100, you know, then you still will. You still will.
Yeah,
Yeah.
that makes sense.
Another way
You're
to
not
look,
penalized on that piece. It's just because that's the cutoff that they use for when it comes to salaries.
Right.
another way to look at it, once you lock in the 2-month window, right?
Yeah.
You could hire or fire people, right? So some clients have asked us, can we hire people? Can we fire? Yeah, you could hire and fire people as long as for that 2-month period, as your payroll, utilities, and rent, subject to the 25% rule that is in the slide right now, right? That will be your forgiveness amount, right? So an example would say that you say that your average payroll is $10, and so your loan amount will be $25, right? For the ensuing 2 months, you have up to $25 to be forgiven in payroll, utilities, and rent, so long you comply with this 25% rule that that Luis is articulating here, right?
Great.
So,
Thank you. Okay, so here's just to outline real quickly what you need, what you're going to need to apply. You want to take this, Luis?
Sure. So there is an application. I have talked actually also at least to people from 3 different banks, meaning Bank of America, Chase, and Wells Fargo. And I understand that they already created an interface online where they can actually do the application online using their typical business accounts that they have with the respective banks. But even if that is not there for the bank that you use as your commercial or business bank, the forms are available in a number of places, including the SBA. And like also it was mentioned before, as a business owner, if you have already contacted your relationship manager from the bank, that would be the most recommendable thing to do. If you haven't, and your bank happens to be one of those that has not set up already an online interface to do that, I'm afraid that you're going to have to try just to keep trying to reach somebody who could actually help you with the reception of the documents for that.
Okay. The one thing I wanted to ask, because I've seen a lot of guidance saying you do want your 2019 or you want your tax returns complete. Do you need to have your 2019 tax returns done, Carlos?
So right here, this is a good little slide here, because at the end of the day, really SBA is leaving it up to the borrower to make sure it's the responsibility of the borrower to provide the required documentation. As you know, every business is unique. They may have different ways of calculating payroll. They may have a third party involved, a processor, or just keep it internally. But for the most part, as long as you're able to provide some documentation of how you're coming up with the calculation, that is what we're going to be relying on. So a lot of different banks they took those supporting documentation examples and created something from as far as from the bank level, what they're comfortable with, what their expectations are when it comes to verifying a loan amount. So these are some examples that you can use, but at the end of the day, you have 12 months. The previous 12 months. In the previous 12 months, you have 2 options really. You can look at it as calendar year 2019 as your 12 months, or you can do it 12 months from the date of the application. So if you're doing it for April 1st, you can go back April 1st, 2019. So it's really up to you how you want to decide that. Work with your bank, and when it comes to coming out with that number. But at the end of the day, it's the responsibility of the borrower to your guys' point, make sure that they have their payroll documents intact and provide the information of how they're coming up with that supporting loan amount.
Okay, thank you, Carlos. All right, so we're going to transition now to the EIDL loan. Which one of you wants to cover this? This is more the loan. There's the loan and there's the advance, correct?
Yes, Carlos, I have some things to say, but if you want to jump first, I'm fine with that. But I'll have a couple of comments that I'll definitely would love to make at some point.
Absolutely. So I can cover this. So the EIDL loan program is our economic injury disaster loan. So this is the loan program that was initially launched at the start of, the outbreak of the coronavirus and the recovery efforts. So the difference is right now we cover the PPP program because it's the one that's, getting a lot of attention right now. There's a lot of just news and information about it, and you can start applying today. So with this one, unlike the PPP program where you're going to a bank for that assistance and that loan, with the EIDL loan program is you're going through the SBA. So this is you're going directly to the SBA for this financing. There's no third party involved, and the money, once approved and closed, comes straight from the Treasury to that small business. So that's, something very unique. And when it comes to like the eligibility requirements, it's more flexible than it is, say, from your PPP standpoint. That's just one thing I wanted to throw out there. So it's not a loan forgiveness. So it is a loan. However, it's one that's there to help the business sustain itself had the coronavirus never happened, right? So what it does is helps you it's a working capital loan intended to help pay costs like, you got payroll, you have rent, you have other working capital needs or operating expenses that the business needs to service. So you can use that fund there from the disaster loan program to pay for those costs. And, one of the unique things about it is it's a more streamlined process. So this is not like a formal loan application you do with a bank that's going to be requiring you, some thorough underwriting and different documentation when it comes to collateral and financials. If you go to our website at sba.gov, /disaster, you will notice you'll be in and out about 10 to 15 minutes because it's very limited as far as documentation up front. It's going to ask you some basic information about the business. It's going to ask you about the actual principal, and you submit that, and that's the start right there. So just some basics there. It is, $25,000 or less. It can be fully unsecured. It's going to be based, as well. Just there are some additional forms that may be required, but it's really dependent on the loan application and submission. So once the SBA loan officer receives that, and through their determination as far as what kind of loan amount is going to be sufficient, if they do require some type of additional information, they'll reach out to you directly. So this could be anything as far from, say, a tax return, maybe a certain schedule from your tax return, other forms like that. But for the most part, it's a very streamlined application process. And, we've already seen, dozens and dozens and dozens of approvals already coming back. I don't have the final count here with me. And one of the unique things about this is, as part of that legislation that passed, there was a up to a $10,000 advance that was part of this program. Now, I want to really stress it's up to $10,000 advance. I'm really not sure what that breakdown is going to look like at the end of the day, but it is something that in order to be in the running for that and to request it, you still have to go through this SBA disaster process. So once you start putting the application in, there will be a certain screen that you approach, and it's going to ask you, do you want to request that? And once you check that off, it's submitted, and then then you'll get an answer within a few days.
Okay, so I would have to say a couple of things. Having spent most of my career as a banker, right? The PPP is a limited underwriting type of loan, right? You check the boxes, you're gonna get the loan, right? This one is a real loan, right? So there will be a higher level of underwriting, right? The SBA has done best they can to streamline the process, but for loans, it goes up to $2 million. For loans up north of 200,000, there will be some kind of collateral guarantees, credit score requirements. So let's be straight here, right? There will be some underwriting, right? There's also you need to demonstrate evidence of impact, right? The SBA has historically been a little clunky and bureaucratic in processing their loans. I'll be the first one to say that they've taken meaningful step forwards to streamline the process in this one. However, this will look, smell, and feel like a really underwritten loan as opposed to the PPP, which is really just a processing of a transaction, right? Key pieces of advice for small businesses, same as before, make sure you do your math in terms of The accounting is done right. Make sure you're smart and strategic about determining the loan amount, right? You know, it's not just working capital. It could be, you know, inventory build out. It could be transition costs, right? The terms are pretty favorable. I believe this was the one that goes up to 10 years, Luis, right?
30-year
Yes,
term on this.
30-year amortization at a very low rate at 3.75 for profits, 2.75 for not for profits, right? Great product. If you can get this loan, get this loan. But let's also be clear, this is more like a normal loan, right? Where the PPP is more like a grant than a loan. Right?
Yeah, I wanted to, that's true. The only caveat is that actually they did actually relax some of the requirements also for the idle loan on the coronavirus crisis. And for example, looking at the act, some of the things they actually waive are actually there for when it comes to the personal guarantee for loans that actually no more than 200,000, that was waived. Also, even the requirement that an applicant needs to be in business for 1 year period before the disaster, that was also waived as long as the business was in operation by January 31st of 2020. And also another thing that was waived was actually the condition that they referred to as a credit elsewhere. That was also waived at this point. So although it is true that the idle loan typically will go more, it will be more strict in terms of requirements, there are also a few things that were actually relaxed under the COVID-19 scenario. So, and for that matter, and I'm going to actually even add, because actually the way it is bundled within the SBA website that you're actually requesting. Well, I think Carlos said actually, you request also the loan advance. I wanted to also emphasize that the loan advance is actually for you to keep whether you are approved or not for the idle loan.
Right. So has anyone on the call, if you were on the call, I believe in the beginning of the call, we had about 8 or 10 people that have applied for the idle, right? I'm curious to see if there's anybody that have gotten the advance. The probable answer is no, but I'll be if anyone has any intel on that, please put it in the chat room, right?
In the chat. All right, we're gonna move on to the next, just so we have time. So this is the loan advance.
Yeah.
I think our point here is to encourage you to apply for the $10,000 advance. It is not repayable, so don't lose out. Please apply.
Right.
All right. Do you want to say something about
the last two, Betty, in the interest of time to take the questions, I see those, first of all, typically those two are going to be for businesses that already have a relationship with an SBA Express lender. If you don't, this is not going to be for you. Mm-hmm. And the debt relief, actually, the SBA debt relief is also a loan that is it is a good loan if you already have a current and in good standing loan with the SBA, like it's one of those 7A, 504 type of loans with them, or you're in the process of getting one. So if you're not in either of these two cases, whether you have a relationship with an SBA Express lender or you already have a 7A, 504 or micro loan from the SBA, these two things will not apply to you. And my guts tell me that there will be a much smaller number of businesses that will be then taking care of this.
There's only one person on the chat who has applied for the idle advance, but has not received it.
Yeah, I suspect that there's more than that. They just haven't submitted it, right? The question is, if anyone has received, that's the data point that I'm looking for.
Yeah.
I haven't heard, and I talked to probably 10 to 15 small businesses every day. I haven't heard of one small business that have gotten it yet. So, you know,
I'll be surprised too. And again, given that the emergencies were declared sometime between, actually Massachusetts, I think the emergency was declared sometime in March 15, 16. And the time that is now, again, yes, to your point, I'll be surprised if actually those funds have been already.
But I just want to add one thing though, Luis. I'm glad you clarified a little bit as far as the underwriting, the way that SBA is looking at those disaster loans. Because anyone on the line, I don't want to discourage you to apply, but because it's not your traditional, loan approval. So I really want to make that clear. And when it comes to the SBA Express, loan there, that bridge loan. So you're right. It's more of a loan. Now we're seeing the focus shift to the Triple P program, but the way that bridge loan was intended for was while you were waiting and you had an already existing relationship with the bank, you were able to then apply for an express loan while that approval was coming through. So it made sense where the small business, they apply for the disaster loan while they waited for that approval to come through, they can apply for an express bridge loan, get that funding from the bank, and then they can, pay costs. And once that funding from the disaster loan comes through, they can pay that express bridge loan down. So that was the purpose of it, to get it more out there. It's part of just our traditional standard loan programs, and really it's really activated during times like this, during a disaster.
Yeah, and maybe basically another picture for this is actually typically these loans are there for disasters such as hurricanes, tornadoes, earthquakes. So actually the implication that you can use those funds for material, equipment, and other kind of work capital, it might not be exactly the case that we're facing right now, since there hasn't been really that much of a, call it, that type of destruction, so to speak. It's a different kind of disaster at the moment.
You're right. And you're able to use also, you're not limited to one or the other. So if you were a small business owner and you have some different costs and expenses, you can take advantage of both programs. So that's something that, you've seen a lot of confusion, a lot of different material being shared. But at the end of the day, you can apply for each program as long as you're not using the proceeds for the same exact purpose. But you are eligible for those two programs. And I'm talking, the disaster loan and the PPP program.
Great, thank you. So on the debt relief, I think we covered a little bit of that. Do you want to say anything about the SBA lenders? I know Bob Nelson this morning referenced that 135 lenders are authorized right now in Massachusetts to do these loans, more being approved every day. The Fed also approved a loan program to help take these loans off the balance sheets of the banks so that they could free up capital to lend more. So that is going to help create liquidity in the market. Anything you want to share, Carlos?
No, absolutely.
Yeah.
No, absolutely. So that, you're right. You're right. So right now we're seeing more and more banks come online. Even today, we have new approvals, new authorities coming on and, requesting new accounts so they can start processing apps for their customers. So one of the big things is there is that tool that came out. I know at the beginning of their initial launch, there were some issues with it, but I believe it's, back online. So you can either start there at that website that link that's provided, or you can also go to, I know for Massachusetts specifically, there is a lending list on our website, sba.gov/Massachusetts, or MA for Massachusetts. And there's a lending list there, and it gives you a listing of, the banks that are doing business with SBA. Also, we're trying to complete another list for, specifically for PPP lenders. So, work with your bank. I know at the beginning, some banks, were starting with their existing customer base because that demand was so high that they just didn't have the capacity yet to expand. But as more and more are getting comfortable with the programs, more people are coming online as far as being able to take apps. It's going to be something that we see that's going to expand more, and then everybody should be able to, there'll be more lenders in the space.
Yeah, wonderful. Thank you. All right, so before we're going to go to Q&A now. I will, after Q&A, go through a couple of other loan type of products that have been launched by Amplify, BECMA, and others, and we'll get into that in a minute. But I'll just keep it here. So I have two. I'm going to unmute. I see Ray has his hand raised. I'm going to let you speak, Ray. You're on. You should be able to speak. Hold on. Ray? I'm not sure he can. Let's see.
He's good.
He's good?
Yeah.
Okay. All right. And Nader, let's see. Nader, you're on. You wanted to make a comment. Nader?
Yes. Hi.
Hi.
This is Nader from the Hispanic American Institute. Hi, Juan Carlos. Hi, Carlos and Luis. My 2 cents are that here at the Institute, we have been working with the small businesses for the past month and a half, just around all these type of loans. I saw Carlos a couple of weeks ago. But here at the Institute, we have payroll, we have contractors. So we make a decision to apply for the PPP program. And everything that you guys said is the truth. But Juan Carlos mentioned that to begin with, as a former banker, and Juan Carlos as a former banker, the key reason to start is to identify your bank, number 1, and number 2, to identify the lender. So we did that. We identified the bank and the lender, and we started the process. The issue in knowing your lender or knowing your bank is based on the relationship. And we went through the process, and today they asked us for the payroll information. That's another issue that I think Luis mentioned it. They will ask you for your 941s, and we produce those. It's very simple. Juan Carlos mentioned that too. It's very simple. Check your bus, but that doesn't mean that you got the loan. Or you get the loan, but the loan has to go to the underwriter. Mine went today to the underwriters. That's all. That's all I want to tell you guys. And congratulations, you're doing a great job. And I'm going through the process. I'll let you know if I get the check.
Let us know. Thanks, Nader, for your comment.
This is JC. I saw that you forgot to click on the advance. I just chatted with you. You get a tracking number at the end of your idle submission. If you take that tracking number and send an email to the SBA inbox and say, this is my loan tracking number. I made a clerical mistake. I forgot to click on the advance. They'll rectify that.
That's great.
Okay.
Yeah.
Thank you, JC. All right, I'm gonna unmute you back, and then Yesy, Felix, I'm gonna allow you to talk. You have a question. Go ahead, Yesy.
Yes. Hi, how are you guys? Thank you for doing this for us. I applied for the loan, not the PP, not the payroll protection program, but the other one, the EIDL. And it was a very streamlined application. It was pretty much asking me about my business, then about myself, and some general questions. But at any point, it didn't ask me to submit any paperwork. It didn't ask me to put how much money I need or any of that. And I heard you guys talking about that. Did I apply for the wrong thing? Or
No, you didn't. As a matter of fact, the way you feel is a very normal way. Maybe Carlos can shed some light. What I think it's going to happen is you're going to get a call from, eventually you're going to get a phone call or an email requesting a series of documents, right? All that the online application for the EIDL does is just gets you in the queue, right?
okay.
So I can provide some light on that. So it's going to be in tiers, right? Depending on what that loan approval will be, there's going to be they're really trying to turn these around real fast. So it's not going to be like your traditional underwriting, as a bank. So what's going to happen is it's broken down into tiers, and you'll be able to get a response just based on the information that you provided. So you notice, you're right. I forget the name who asked the question, but there is no formal loan amount request in there. There's no field to put in what you're looking for. So it's really based on the information that you're providing there, and some credit scoring models that I'm sure they'll be using to making this decision. So it's going to be based on the business need and the different tiers that they will be qualifying under. And you should, hear back real fast here now that it's been upgraded, updated, and they're bringing in different lending tools to get this out to everyone faster.
And the time frame, is it for like 1 to 3 weeks, a month, 4 to 6 weeks?
So that's a good question. So when the original launch happened, so now we're looking back almost 2 weeks, Wednesday, the original number that was thrown out there was 2 to 3 weeks, but we saw approvals coming back before that, less than 10 days. So it's going to be something that they're looking to improve on, and they're bringing in different national lending companies to help out with this backlog. So you should be hearing something sooner rather than later.
Okay,
yeah, so
thank you.
Jesse, I cannot see the future, but if I were a gambling man, I would tell you that the PPP loans are going to get processed rather quickly. You're going to see a lot of money flowing next week and the week after. I've told my clients that they should prepare on an EIDL timetable of around 30 days, right? Particularly if it's a complex loan. If it's a $50,000 loan, it's different if it's a $1.5 million loan, you know. So depending on the underwriting criteria, right, there might be some back and forth. And as much as the SBA has streamlined the process, they're not going to be passing out $2 million checks with some level of diligence, right? You know, how do we come up with the right lending amount? Do we have tax records, right? So I would hope that it could be 2 to 3 weeks. I think you should plan for 30 to 45 days, right? With the PPP being a lot faster than that.
Okay, perfect. Thank you.
All right, I'm muting you back. All right, I don't see any more questions and I know we're out of time. So a couple of things that I wanted to highlight. We are really excited to share with you this news. So we have been partnering with the Foundation for Business Equity, the Boston Foundation, as well as a coalition of other partners, which includes BECMA, Commonwealth Kitchen, and UGIMA, to launch a fund to provide Black and Latino-owned businesses with it's a grant / loan program. These are loans that will have zero interest and excellent terms, coupled with the Eastern Bank's model of technical assistance. So there will be the combination of what we call smart capital, right? So it's a cash infusion of up to $100,000, coupled with a response strategy team focused on your business to help you develop your your cash flow projections, your crisis management plan, and to help you get back up and running when all these restrictions get lifted. So encourage you to apply for that. The other loan, we've partnered with BECMA and the Mass LGBTQ Chamber to provide additional types of loans with Berkshire Bank. These are up to $50,000 loans with 3% interest, fairly streamlined underwriting process, no payments for 3 months. So this is another option for you. And this all went out in an email today to many of you. And then the other thing, I know for some of you applying for loans doesn't feel good. It doesn't feel like something you want to do. I do encourage, we're all encouraging our businesses to apply for the PPP and the EIDL. You're eligible for them, even if you're an independent contractor or a one-person business. So please take advantage of these programs. They are there to support small businesses. And the last thing we want to do is leave money on the table. But if you want another option, there are small business grants that are becoming more and more available. The city of Boston also launched a relief fund for small businesses with under 35 employees and less than 1.5 million in revenue. Those applications are open. Encourage you to apply ASAP if you are a Boston company. Facebook, Hello Alice, Shea Moisture, Spanx, Verizon, they all have grant programs as well. These go very fast. So when we send the presentation, click on the links and apply.
Well, the other thing I was going to say, Betty, is like spread the word, right? Because I think that there's still thousands of Latinx business owners that do not have their full arms around this, right?
Yeah.
And spread the word.
Yes, please. So this is, I heard Bob Nelson said this morning, and so did Nadine Boone. Don't disqualify yourself. Don't talk yourself out of applying. Just apply, get some help. I mean, the folks on the phone here on the webinar are here to help you. If you need other technical assistance, Nader is on the line. There's all kinds of Latino organizations open and available to help you apply. SCORE is also available. Here, these are resources for your businesses. So we'll share all of this with you as well. The last thing that I'll say is we have to keep working in partnership with each other and supporting each other. So if there's anything that you learn of, like JC said, encourage you to share it with your fellow business owners. We are in this together, and so really, really want to make sure our businesses survive and thrive. And if you have other supports that you need, please don't hesitate to reach out to any one of us. Any of you want to say some final comments before we close?
One thing I would want to share is, my contact information is there, and I know a lot of times there's a lot of information flowing around as far as different programs and whatnot, but I'm happy to have, answer any questions. It may take just a day to get back to you because just it's incredible volume we're seeing. And one thing too, I'll send to you, Betty, is just a borrower fact sheet when it comes to the actual PPP program, some things, some takeaways, something you can share with everybody. And there is a document when it comes to the differences between the EIDL program and the PPP program, and some benefits for each of those. So I'll share those too. You can send those out, but I can't stress enough that, any information and questions, you can direct them my way. And thank you again for this opportunity.
Wonderful. Yeah, the emails are below on this slide. When you get the slide, you could pull it out. We will share the materials that Carlos just talked about along with the slides in the recording by tomorrow. And the last thing I would like to say is thank you to all of you for participating. Carlos, Luis from Surfside Capital, JC and Luis from Surfside Capital, Carlos from the SBA. Also want to thank Beckma, who's been really supportive with all of this. Rosario, I cannot see you, but do you want to say any final thoughts here for our businesses?
Thank you, Betty. I'm here. You cannot see me. I think my video is not working, but I really appreciate everyone, especially the speakers, for coming on the webinar today. This has been very helpful information, and I hope that is reaching to the businesses and the entrepreneurs that needs to hear it. We are continuing gathering information on resources and finding the best way to disseminate the information to everyone. So I really appreciate everyone that tuned in today. And we are continuing putting a series of these webinars and other virtual conversations for everyone to join in. So we'll keep you posted. But stay in touch with us through social media. We're gonna be announcing those.
Last thing, Carlos, I do want to ask you, because we have gotten some questions and comments about whether these materials are available in Spanish. So even, the PPP loan application is in English, the fact sheets are in English. If there's any way that you could translate some of those into Spanish or other languages, that would be really helpful, I think, and appreciated by our businesses.
No, I can certainly look into it, but I haven't seen it, but doesn't mean, maybe it's being worked in the background, but I can definitely look into it for you and get an answer back to you.
Yeah, if you could advocate for that, that would be helpful.
Yeah, that would be important, Carlos. And we have a few clients in the Merrimack Valley, particularly Lawrence, and in Chelsea, and we come across this issue all the time, right? Which is, the lack of resources in Spanish. Thankfully, there's a lot of Spanish speakers in our firm, and we're glad to help with that to the best of our capabilities.
Yeah. All right. Well, thank you, everyone. Really appreciate your time. Stay tuned for our next webinar next Thursday with Zamao Arenas and Josian Martinez on marketing hacks to pivot your business. All right. So stay tuned for that in the thank you email. Have a great day, everyone.
Thank you.
Thanks.
Thank you. Bye.